This video is brought to you by Ground News. Stick around to hear more about the special offer they are providing to the entire upper echelon community. All right, it's not really the definition of insanity, and Albert Einstein wasn't even the one who actually said it, but how many people watching this have heard the phrase, the definition of insanity is doing the same thing over and over, expecting a different result? Yes, anyone? Assuming that you have heard that phrase, even if you haven't, today's video is a perfect demonstration of the concept because today we're looking at the cycle of insanity when it comes to venture capital using three separate examples: crypto, video games, and artificial intelligence. Now, of course, some people will be wondering, and rightly so, what is the cycle? And the short answer to that is throwing billions of dollars into a heap and metaphorically setting it on fire because you're greedy. But the long answer is quite a bit more nuanced and requires in-depth examples, so let's get started. First up is crypto, and this is the part where we demonstrate the cycle as clearly as we possibly can. This right here is a list of all venture capital deals occurring in the entire crypto industry from 2014 to 2024. Alameda Research, the bankrupt hedge fund of FTX founder Sam Bankman-Fried, appears over 100 separate times on this list as an investor, 15 of which come back as lead investor, dumping money into crypto projects all over the world. Well, if we visualize these numbers, the picture of what's actually happening becomes rather clear. Nobody cared at all up until 2017, at which point everyone cared from a venture capital perspective, throwing as much money at the wall as they possibly could, hoping it would stick. And then when the hype died down, nobody cared again. It's not about the technology, and it's not about the practical value or utility for these people. If it were, there would be significant investing during off periods as well, probably more so, and not just desperately latching onto a retail speculation wave. But later down the line, in 2021 and early during 2022, the hype cycle came back, the prices went up, the speculation bubble revamped itself, and suddenly, here we go again as the venture capital comes flooding back into the industry. It's not a coincidence that these two hype cycles of this is the future, we have to throw as much money as we possibly can at the entire industry, happened precisely during the two all-time high price movements of Bitcoin. It's a rudimentary example, to be sure, but the cycle here is plain as day. Something is perceived to be popular, aka throw as much money as you possibly can at it. But that kind of mentality doesn't typically work out very well. Remember, Alameda Research was leading a lot of these funding rounds and participating in over 100 of them. But Alameda Research was just a money funnel attached to FTX, and FTX was a multi-billion-dollar fraud run by Sam Bankman-Fried. It gets better, though, because FTX itself also received large amounts of venture capital through investments, sparking questions from the SEC directly about how the hell it would be possible that no one conducted proper due diligence before throwing billions of dollars into a wood chipper. Three Arrows Capital, another crypto hedge fund that went bankrupt specifically as a result of this cycle, participated in 31 of these funding rounds, often directly alongside Alameda Research. But for Bankman-Fried, at least he actually got a 25-year prison sentence, which segues perfectly into today's video sponsor, Ground News. I vetted Ground News personally for over 6 months before I actually agreed to work with them, and I use the service for one reason in particular, and that's comparison. Contemporary breaking news is widespread, to say the very least, but Ground News gathers it all in one place with a clear system of marking bias, corporate ownership, and distribution of coverage. For this example, Bankman-Fried's prison sentence, that is, they've gathered 402 different articles where you can see that 30% lean left, 21% right, and 49% center. You can compare headlines, find discrepancies, and make your own determinations on what to believe or when, because Ground News is a subscriber-supported service that is primarily data-driven, so that users can be the ones to think critically about what it is they read and not have someone telling them. Ground News helps cut through biased reporting, especially. They don't tell you what to think, as I just said, and they provide the necessary tools to help you navigate information better in a modern digital environment, which is a very valuable tool. I've also thoroughly vetted the different bias rating services that they use in order to categorize the articles, making me confident when I recommend them since I use the service myself while researching videos. If you click the link down below in the description to sign up, you'll get 40% off the Vantage plan. Again, link down below in the description, ground.news/echelon for 40% off a Vantage plan today. Big thank you to Ground News for sponsoring the channel and for being a research tool that's used in the making of this video. All right, we talked about crypto, but what's next? Next is esports, and having showcased the outline of what is happening, generally speaking, this time I want to dig deeper on a specific example, that example being FaZe Clan, and look at how it's actually happening. High level first, esports is once again a perfect showcase of the pattern we just described. Excitement leads to hype, leads to venture capital paying attention, leads to oopsie, sorry, we lost everybody's money, never mind, let's move on to something else and throw money at that. But aside from the actual criminal fraud cases like FTX, You'd be very hard pressed to find a better example than FaZe Clan when it comes to just setting money on fire. See, FaZe Clan was basically the esports darling child. They raised over $40 million in multiple funding rounds, eventually going public via SPAC merger with an expected valuation of over $1 billion. And when the ticker finally went live after the IPO, the company was valued at $725 million. But that's about as far as they got before it all came crashing down. In less than 1 year, they had lost over 97% of their stock value, eventually receiving a notice that they would be delisted from the NASDAQ if they didn't get the share price above $1 for 10 consecutive days. Spoiler alert, they couldn't do that. And shortly before the company would have been removed from the index anyway, a company called GameSquare acquired them, full scale, delisting the ticker completely, for the paltry sum of $15.75 million. A company that had raised $40 million from venture capital and IPO'd with a market cap of $725 million over the span of less than 2 years had devalued itself to a share price of 18 pennies and been bought out completely for less than half of what they raised in venture capital alone. Now, you might be wondering, how is it even possible to fail that badly? And setting aside things like the $30 million party mansion that they have, or the PPP loans that they took during COVID that were supposed to be meant for small businesses, it's pretty straightforward to see that the company had no future and did not deserve to be the subject of venture capital delusion if you dig a little bit deeper. One of their members, named FaZe Rain, after a heated exchange on social media, but the details of that aren't really important, decided to reveal esports revenue stats for basically the whole company, which one might think would be part of the discussion when major investors come on board, and the numbers he disclosed are staggering in a bad way. I won't go over all of them right now, but from just 9 of their esports teams collectively, FaZe was losing $750,000 per month. That's not even close to their total losses, by the way. That's just from these particular esports teams. But when you have a pro team of Valorant gamers that are dragging your company red by over 200 grand per month, yeah, at a certain point, the idea of venture capital funding is indistinguishable from the process of pouring gasoline all over a pile of your money and setting it on fire. However, none of it compares to what comes next, not even close, because the cycle of hype leads to FOMO, leads to venture capital jumping in, leading to massive losses, is getting ready to happen yet again, bigger than ever before, with artificial intelligence. Crypto showed us what happens, plain as day, just visualized on a graph easily. Esports showed us how it happens, to a degree with a particular example. So let's use that and look forward at what the future might hold. First thing right off the bat here is that AI historically already sits very high on the list of venture capital targets, and it's been growing in that way for many years. According to reports from the Organization for Economic Cooperation and Development, OECD, venture capital targeting AI has grown from $3 billion in 2012 to $75 billion annually in 2020. For the sake of comparison, just to put these things in perspective, crypto, the entire crypto industry that is, in the past 10 years total, has only processed roughly $100 billion of venture capital deals, which demonstrates the scope of what we're talking about for AI when we understand that 2020 wasn't even the relative peak for this industry. Interestingly enough, 2023 wasn't the peak either, despite massively growing public awareness, because in 2023, the annual venture capital deals fell to around $50 billion, where $10 billion of that total was given exclusively to OpenAI, but therein lies the problem. See, the relative proportion of all venture capital being invested directly into artificial intelligence is actually rising. According to Crunchbase data, over 20% of the entire venture capital market was being devoted to AI-related startups in February of 2024, which is significantly higher now, by the way, than it ever was previously. Meanwhile, OpenAI is losing a ridiculous amount of money. $500 million per year was being spent during the development stage of ChatGPT by itself, and now some reports allege upwards of $700,000 per day being lost in order to run the service, while total user base is actually falling and the company struggles to monetize. But none of that really matters, actually, because if you can capture the venture capital hype cycle, and that's precisely what Sam Altman is trying to do, Sam Altman being one of the original funders of OpenAI, as well as the unshakable CEO of the company, who was briefly ousted by what seemed to be a failed coup by the board of directors before coming back with a vengeance. If you can capture the hype cycle, well, all bets are off. The entire world is your oyster. This is where it gets crazy, at least in my opinion, and where the whole pay no attention to the man behind the curtain concept becomes completely absurd. Here's Sam Altman speaking 4 years ago at an event called Strictly VC.
The honest answer is we have no idea. We have never made any revenue. We have no current plans to make revenue. We have no idea how we may one day generate revenue. We have made a soft promise to investors that once we've built this sort of generally intelligent system, basically we will ask it to figure out a way to generate an investment return for you. It sounds like an episode of Silicon Valley. It really does. I get it. You can laugh. It's all right. But it is what I actually believe is going to happen. Like, there's that joke that I actually think is very funny, which is like, step 1 is do this thing, step 2 is do this thing, question mark, question mark, question mark, profit. But like, I think if AGI is on the table, that's actually okay.
That is just frankly insane to me. Invent something and then ask it how to turn a profit, which somehow justifies companies awarding tens of billions of dollars to that pursuit, because question mark. But with that in mind, turn your attention to this. Sam Altman seeks trillions of dollars with a T, trillions with a T, to reshape the business of chips and AI. OpenAI chief pursues investors, including the UAE, United Arab Emirates, for a project possibly requiring up to $7 trillion, end quote. $7 trillion. That is unbelievable. But for anyone who doesn't quite comprehend the scale of that number, and you'd be forgiven for not really comprehending that, let me put it this way. The entire GDP, gross domestic product, of the human race on planet Earth right now is roughly $100 trillion. Sam Altman is seeking what amounts to roughly 7% of that total as funding for his new AI venture, demonstrating the largest iteration of the venture capital insanity cycle that we've ever seen before. I'll go one step further here. GDP is a commonly referenced data point on economic strength a lot of the time, but it may be kind of hard to put the comparison in perspective with that number. Try this one on for size. Credit Suisse estimates a global wealth total of $454 trillion in 2022, at least. That means the added value of all products, currency, assets, and accumulated wealth on a household level across the entire planet, which therefore means that Sam Altman is requesting the equivalent of over 1.5% of the entire human race's personal accumulated capital for his next VC initiative. That is like bonkers level insane, cuckoo bananas, down the rabbit hole Alice in Wonderland, what the fuck is happening? The venture capital cycle of insanity, under the not technically precise definition that wasn't even really ever stated by Albert Einstein, is the cycle of investors giving money over and over and over again to projects that will never and could never pay them back, expecting different results each time because this one's going to be different. This time I'm going to get rich. We saw it with crypto multiple times, more than multiple. It's the entire crypto industry. We saw it with esports very clearly showcased, and I don't understand how anyone could have ever looked at the FaZe financials and said, yeah, let me throw money at this group of kids. And we're seeing the largest iteration of it yet by far playing out in real time, once again, as the industry fails to self-regulate or temper their expectations in the slightest, rushing forward to throw money at things that have almost no reasonable chance of ever returning that value. They do the same thing over and over, expecting a different result, aka the not-so-Albert Einstein definition of insanity. I don't know what will come of it this time in particular, but as the cycle gets bigger, so do the consequences, and this is the biggest version of the cycle we've ever seen. Anyway, that's it. If you want to support the channel, there are links down below. The video sponsor, Ground News, of course, a VPN affiliate, Locals, and Patreon for monthly subscriptions. That's probably the best way. Click that if you want to support, and more, but I'll cut it there and stop rambling. As always, thank you all for watching, and have a nice night.